if I'm being playful, I like to describe myself as being in the truth business. And I want to sort of push this idea that truth is better than trust, right? You believe me because I've proven to you that I'm right, rather than you just trusting me that I'm right. So if I rush this build, right, the chances are there'll be a mistake. And one serious mistake in a data platform throws all good faith out the window, and you will never really recover from that. Some of the added things we've been able to do is generate some great data on when you press start on a speculative development, what's the average time it takes us to actually let that before completion. Today, knowledge is power, and those with the biggest data sets are going to they're going to understand what's happening faster. So, if you are a huge multinational property owner like BlackRock, Blackstone, they probably have such a big property portfolio, they have a better understanding than our own governments do of exactly what the property market is doing.
Welcome to the People Property Place podcast. Today I am joined by Chase French, Director of Financial and Portfolio Analytics at Tritax. Backed by global asset manager Abrdn, Tritax invest in and manage critical supply chain real assets in the UK and Europe, which are aligned with the structural trends shaping the future economy. Chase joined Tritax in 2019 from Avison Young Real Estate Finance, where he was leading the analysis of massive multi-phase developments and property portfolios alike. He has previously held roles at Rabobank International and holds a BSc in Mathematics and an MSc in Economics, Finance and Management from the University of Bristol, and it gives me great pleasure that he joins me today. So Chase, welcome to the podcast.
Hello, thank you for having me.
Not at all. Well, look, who needs AI when you have a human computer in the form of Chase French working at your business? Well, look, this podcast has been a long time coming. I'm a big fan of what you have done and how you've navigated your career, and I'm keen to kind of unpack and unpick a little bit about what you have done at Tritax. Before we get onto that good stuff, a place that we always like to start these conversations is how and why did you get into real estate? But I guess the pre-context to that is probably university.
Yeah, so, I mean, after graduating, I have to be honest, I never considered working in property. And it's only through sort of a lucky mix of circumstance and hard work that I've ended up here at all. I mean, as a maths and finance graduate, like all of us in 2007, I only ever wanted to work for a bank, but not on the investment side, on the markets. So my first role actually turned out to be in Hong Kong, and it was December 2006. So just as the credit crisis was unraveling financial markets.
So in Hong Kong, is that because you couldn't get a job in the UK?
My father was based there, and he actually was working in a hotel. And funnily enough, he was like, "Do you want to come live in the hotel with me?" Or I would have rented a flat somewhere in London. And Hong Kong was a new frontier, wasn't it?
So you moved out to Hong Kong.
Yeah.
You got a job where?
Got a job at Rabobank International on their trading floor. And for those first 6 months, thinking that this was, business as usual, the first 6 months I had Bear Stearns collapse, Lehman Brothers collapse, Hang Seng falling by 5% on a daily basis, grown men crying. I was thinking, what have I got myself into?
You're the lucky charm.
Yeah, but I mean, look, it was a really good time. I worked as a multi-asset structurer. And actually, I'll take a step backwards. It was actually, funnily enough, a really good time to start working because there wasn't much banking to be done. So I had, my bosses sit me down with, 2,000 page book on Excel, 2,000 page book on Visual Basic, and just said, use this time to perfect this craft. And, I wasn't, trying to make business or anything like that. I literally just had 6 to 9 months to learn the skill sets that when the markets change direction, I'd be prepared. So, as I said, I was a multi-asset structurer, which meant, we were developing, complicated structured products involving, combinations of calls and put options and knockouts and knock-ins and things like that. But what I really liked was what we called algorithmic strategic indices.
Okay.
Now, that sounds really complicated, but actually it's just a way of, what if I said every 6 months, we'll take the universe of stocks, we'll download all of them, we'll filter them for liquidity, we'll filter them for some simple trading algorithms, sector analysis, all that sort of stuff. We might put a little trading thing on top that if the moving average, goes above another, we'll sell it and buy it back. Anyway, it meant to be like a mathematical construct over a portfolio, a bit like a tracker fund. Anyway, so that went on for about 7 years, and I would travel around Asia showing off these products to all these like high net worth individuals, private banks, all this sort of thing. And around 2013, the market had gone off, that sort of thing. The world realized that a lot of these banks didn't really know what they were doing. And so that sort of was the end of that chapter.
Because your really complicated financial products weren't actually beating the market.
Well, I think mine were, but there's always this joke that when you do this like historical backtesting of the markets, they say you're driving forward while looking in the rearview mirror, and there's a lot of fear that you're basically data fitting what gives you the best results. So what you have to do is fix the model in time, and then run it forward for 2 years to build up that track record that what you have built, structurally has found some alpha and is not just data fitted to history. Interesting.
So taking a step back then, growing up, clearly super analytical. Was that always your strength at school? What kind of kid were you?
I think I was a pretty, as a normal kid. The science, the maths really sort of started to come out around 13, and I think it was actually probably to do with my maths teacher, who, I don't know, he was interesting. He showed me that it was like there was a gratification to doing it all. So around GCSE level is when I really started to like focus in on the maths, the physics, chemistry, all of that sort of work. And I suppose without really thinking about it, I just said I'm going to do mathematics, thinking, oh, that's fine, I've done well at A level. But there's a very significant jump between A level maths and university maths, and I suppose one of my regrets in life is that I probably didn't do something computer science based. That's probably what I would change.
Because you went to Bristol and you did
straight maths.
Just straight maths.
For 3 years. And I was definitely out of my depth in some points.
And then from there, you went and you did your master's in economics, finance and management.
Yeah.
Is that just to give you a bit more of a commercial understanding and appreciation?
It was definitely to sort of, as a sales pitch of me, I wanted to sort of tweak myself to not just be, a mathematician. I wanted to show that there was a commerciality to what I do. And that is kind of an underlying theme of my career, is that, I have tried to perfect these like analytical techniques, but ultimately what I think I have that a lot of other people don't is this creativity to go and try and do something with it. Especially, on this, financial operations, things we'll talk about later.
An ability to market, front it, sell it,
explain
it.
Exactly. I'm not just like this.
You're not just a quant.
Who sits in the back. I'm not a quant.
You're not just a pure. Well, you are a quant, but you've got more than just being a quant.
I think I speak quants languages, but
there's
better people than me. I'm no math Olympiad.
Well, you've got a multitude of skills. So you did 5 and a bit years Rabobank over in Hong Kong.
That's right.
Market turned. You decided, I need to go and try and find a new challenge.
Yeah.
What was going through your head, and what did you go on and do?
So, truthfully, I have to admit, when I came home, I actually found it quite difficult to get a job. I met lots of people for about a year, and a lot of people were like, "Look, you're clearly a smart guy, but I just don't know what box to put you in." And that was very frustrating. And obviously, when you're meeting headhunters, not all headhunters, obviously. Some of them are just like, well, this one's a bit more difficult to sell. I'm not going to pick that up. Anyway, I found a job after a year as a commercial finance manager at a healthcare company, which, wasn't really what I was looking for. But I used a lot of my time during that fun employment to really upskill. And, for any of the listeners out there, I really recommend a website called EDX, which is actually set up by Harvard and MIT, where, you can get courses from them, 3-month courses, modules that they actually teach at the universities for £50-60. You'll do that 3-month course. You'll get your certificate. It's all uploaded onto LinkedIn, and it's a phenomenal way of learning. Even last month actually, I completed a 2-year course at Harvard Online in the Professional Certificate of Data Science, which was a great experience.
But through EDX?
Through EDX, yeah.
So you used... Already there's a theme of learning, continuous improvement, going above and beyond. You're really kind of studying and honing your craft. So you use that time as a financial finance manager, right, to really upskill. What was your kind of thought process in terms of like the type of industry and the type of role you wanted to get into? And I appreciate you said that people were struggling to position and place you. Where did you ultimately want to place yourself?
So still to this day, and I hope some people take solace in this, but I'm not very good at answering this question. I find I know the problem that I want to be working on, but I don't know what industry that's particularly in or the exact role I'm meant to fit in. What often happens, and what has happened, is that someone finds me and says, "You are exactly the person I've been looking for. Please come work with me on these problems."
Yeah,
that makes sense?
Yeah. They find you to fix the problems that they have,
and they're like, where have you been? You're not that easy to find, because I don't think there are that many people who are really trying to focus on this modeling and this skill set. I find what happens is a lot of people push the modeling down to an analyst who does it for 3 years. Then they move out of that role up into associate or something, and the next set of grads come in. And I really wanted to. Well, I was like, I want to be a specialist in this.
And so, how did you move away from your finance manager role, and what role did you move into?
So after that is when I joined GVA, or now Avison Young. I was on their real estate financial modeling team. I was hired to lead that function, and to be honest, it was great fun, great team. I had no experience of property at that time, so there was a lot to pick up in those early days. But we were working on equity and debt raises, optimizing PRS schemes, which was a hot topic back then. But where I really started to show some value add was on the analysis of these like really, really big portfolios. Now, everything I'd seen in property was like a single building, single tenant IRR, or maybe something with up to 5 tenants. But, what are you meant to do if you've got 100 or 1,000 or 10,000 leases? Okay. Now, obviously there's corporate software that attempts to do this, but I've found, in my experience, that software is often quite rigid and not capable of the more idiosyncratic situations. And there's a lot of clients out there who want an answer and don't want to have to commit to an expensive piece of software. So we built this system that, would take any number of leases, and it would literally just output in an incredibly accurate way all of the numbers, and that would scale up to, whatever we needed. And where we actually started to get some real traction on that was in the Night Dragon developments at Greenwich. I mean, that's hundreds and hundreds and hundreds of flats and buildings and residential and commercial, and there's something like 600 acres in that Greenwich Peninsula that all had to be modeled out for 40 years. Another situation where it was very useful was the new IFRS treatment of leases was coming in, and we managed to win a contract on all of the radio masts, mobile radio masts across the country. Now, I think this was part of Three's network, and there were 36,000 of these radio masts, all with 50-year leases. So the effect of this new accounting treatment was going to have a massive effect on the balance sheet of that company. And we were able to throw all that lease data into this system, spit out all the accounting treatment, and do that 36,000 times.
So you hadn't had real estate, you hadn't worked in real estate before this role. In terms of real estate as an asset class, did it take you long to get your head around it or understand it in comparison to other synthetics or derivatives that you were working on?
Yes and no. Okay, and I think we might allude to this in some of the next questions, but I think real estate is relatively simple, right, as a concept. It's not rocket science, but it's got operational difficulties, and that's what I see as its main challenge is, how do you manage that many properties? How do you manage the processes of the data of that many properties? And that's what makes it difficult. So
you won a couple of contracts, the masts, Night Dragon. How did your kind of role evolve at Avison Young?
So, I was doing that for about 3 years, and after that, I was headhunted by the greatest headhunter in London, the man himself, Matthew Watts, ladies and gentlemen.
I have to give you a backhander for that.
And he introduced me to Tritax, who, they were growing incredibly quickly. They had IPO 2 years before, logistics was exploding, and they needed somebody to come in and take control of this problem. And I showed Colin Godfrey, the CEO, this system I built for lease projections, and I literally sat in the interview, opened up the laptop, clicked the button, calculated 500 leases in 1 minute, and
he fell off his chair.
He kept us cool, walked out of the room, and gave me a phone call a little bit later on.
So, as you said, I helped you move away from GVA and put you at Tritax. What was the problem that Tritax had at that stage, and what were you brought in fundamentally to do, and how has your kind of role evolved?
I wouldn't say Tritax had a problem. I would say property companies, once they start getting to say 30 properties, realize that they need a more structured operational approach to managing their data.
Because as you touched on previously, there's an analyst that comes in from university, does 3 years of training under an associate or someone more senior who has stepped up, and then they do 3 years and then they pass it on to someone else who does 3 years, right? So external kind of modelling courses or what have you to upskill.
There's no continuity there, okay? And the data's held in Excel. When Excel, as brilliant as it is, I think it's a phenomenal program, it's not a data repository. And what I wanted to create was a very strict set of processes that allowed us then to do many other things with it, which we'll get onto. But it was that for example, one of the things I wanted to be able to do was say at the click of a button at any given point in time, what are my outstanding rent reviews? Now that is data that is very easy to lose track of, and if you've got hundreds and hundreds of properties, you can actually lose the ability to review if you don't act on it enough. And that directly feeds into, the P&L and bottom line of this company. So it's keeping track of this data, these lease events. That was what, I evolved into beyond the financial modelling when I started at Tritax.
And you said once a company gets past 30 properties or so, it becomes more challenging or increasingly challenging. We've touched a little bit in terms of off-the-shelf software package that's inflexible, but also you're locked into lengthy contracts as well. How do groups currently deal with this issue if they don't have a Chase French in their business?
So look, there's third-party software, but my issue with it is that if I want changes to the third-party software, it's either they don't happen, they're too slow, or if the changes that I've requested, if they're particularly clever, then they will get recycled into the program and used to sell onto other clients. So my intellectual property doesn't stay particularly private for very long. I always like to say to people that I am not an accountant, even though I'm trained. I have some accounting training. I'm a projectionist at heart. And therefore, what I'm entirely focused on is what is this business going to do in the future? Now, that means I'm constantly asking the question, do I have the information available to me that allows me to answer that question? And if not, how do I collect it, process it, organize it in an efficient and reliable manner? So the problem I found is that when you rely on a third party, you've nobody inside the business whose responsibility is to maintain the integrity of that data.
Because you can have the software, but it's the inputs
exactly
that are really important, right? Because the software is only as good as the data that you feed it.
Exactly. And, I've seen software that, is trying to be all things to all people, right? And, what I have championed at Tritax is using free software and being 100% in control of it. I can build something entirely to our specifications. I keep knowledge in-house. And we're constantly allowed to experiment, make mistakes, try out new things, and organically build a system that is exactly what we need.
So what was the portfolio Tritax as a business? Was it big box? Was it Euro box? Was it Metro box? What can you just paint a bit of a picture of who Tritax were at that time when you joined the business for people who don't know?
So it's actually an interesting point, because at the time I was hired, it was big box and TPIF, and Eurobox was just launching, or it might have launched, I think 2018 maybe. Either way, it was in its first year or so, and I had spent my notice period dreaming up the best, lease management, forecasting system, database, whatever you want to call it, that I possibly could. Now, in those 3 months, Tritax went and purchased DB Symmetry, which I think it held the largest land bank of logistics land options in the UK. This was 45 million, the potential for 45 million square foot over 200 plus developments. And all of a sudden in my very first week, I was said, the leases aren't the problem anymore. Let's focus on these developments. And, I had to sit down and figure out a way of amalgamating all of the data from these 200 developments in a way that we could then go and communicate to the shareholders just how much value we thought or believed that these developments were going to create. Now, no third-party software was going to be able to do that as quickly as we needed to, or as well as we needed to, because I have to custom build something that works for DB Symmetry, works for us, all these other moving parts. Anyway, it should come as no surprise that DB Symmetry were all over this. They are producing a monthly appraisal in Argus for 200 developments every single month. But more impressively than that, every single month they bring in one more month of actual cash flows and do a reprojection of what's happening. So, what I was able to do was basically take these 200 plus Argus appraisals, throw them into, a script and automation. It would test all of this data for consistency, compare it to previous periods, make sure all the calculations were right, amalgamate this up into this big macro, top-down perspective and output to the partners exactly the trajectory of this development platform. Was it on time? Were things being delayed? Et cetera, et cetera. Now, that is producing roughly 250,000 data points a month, which we have been collecting since February 2019. So, you do the math on that.
5 years. Can I do that one? I think
it's probably 15 to 20 million data points. Now, what I didn't expect at the time is what that data is now allowing us to do, which is really interesting, is we have been able, because I'm tracking every single cost at its accountancy general ledger code.
So what, forecast versus actual?
Yeah, that as well. But we were actually able to create some amazing data on just how quickly steel prices were increasing during the pandemic.
So you could estimate in 6 months' time what it would be?
We weren't projecting what steel prices were going to be. What we were able to do was say, hold on a second, all our constructions are starting to go up in costs here. We should pull back slightly. Now, anyone who does development knows, you can push the accelerator, you can put the brake on. You can't stop this vehicle. But if you know that, in the space of 6 months, construction costs are going up at 5-6% a month, you should take some caution. Some of the other things we've been able to do is generate some great data on when you press start on a speculative development, what's the average time it takes us to actually let that before completion? Because, we really like to do pre-let developments. It de-risks our platform. But sometimes you've got to take that single speculative build to place make this logistics site. And then once you've built that first building and got that tenant in, everybody comes afterwards. So, we were able to get comfortable with, okay, so we might be a speculative build for 7 months, but after that, the data suggests we'll have let this property out.
In terms of your team, can you just give me a bit of a flavour of who's in the team, who it is? Because there's a lot of key man risk around, these super complex models that are getting built, right? If you're the one that owns the IP on it. So
it's an interesting structure where I manage one person directly, but I indirectly manage like a lot of people around the business. If we're talking about a high-performing team, okay, I have a great team and I'm really, really grateful for their work. But I think I prefer to describe it as a high-performing operation. And the reason for that is because I need to draw on information from so many different parts of the business at one time that I need to make sure that works and it works efficiently and quickly that people aren't getting annoyed with having, to provide this information. I find the most obvious way to build a high performing operation is firstly, obviously hire talented people. I find the best ones are the ones without ego, the ones that are only interested in getting the best result for the company, leveraging each other's strengths, dovetailing over people's problems, it all just, good teams work together, harmoniously, basically. The problem with that is when it comes to, modeling, data, analytics, whatever you want to call this field, is that some of the work can be quite repetitive, and that is not going to keep the sort of minds that I want to attract happy for, a very long time. So, when we start a problem, we are always thinking, how can we distill this problem down to the smallest amount of human intervention so that it can be completely automated. Often, we will use Windows Task Scheduler to run scripts at 2 a.m. in the morning, 3 a.m. in the morning, 4 a.m. in the morning without any human intervention, just because I don't want my team wasting their time loading the program, clicking run, and et cetera, et cetera. I also don't really have the manpower to do that. We've also got to the point where if all of our information is perfect, we can compute all of the P&L, all of the cash flows, all of the, the property characteristics evolution, and equivalent yield valuations for 500 plus lettable units in the space of 10 to 15 minutes by pressing one button. Now, what we'll generally do is we'd like to time this when we're about to go into an hour-long meeting. We'll click the button, we'll walk into our meeting, we'll come back, hopefully we'll see a big green sign saying healthy calculation or good. And if it doesn't, it says bad, and it'll list out every ID of every lettable unit that has gone wrong and a definition code of where in the calculation it's broken.
So, in terms of the software itself that you're building, you touched on it's all bespoke. Mm-hmm. What can you just talk to me about the programs or the things that you lean on, or the different, Excel, but also others, Power BI. What are the things that you kind of leaning on and amalgamating, and how does this kind of supercomputer or algorithm or system work?
Well, a couple of things. One is I love Excel, right? And it's a very powerful tool. People are comfortable with Excel as a front end. So that's the way I kind of use it as a front end. That's what people look at. That's how people interact with it. But fundamentally, at the core of this, it's a relational database. It's built on MySQL. It's hosted in Amazon Web Services, and we interact with it with a free software called dbeaver. Beyond that, we augment Excel hugely with Python, Visual Basic, and we've been really starting to get more into Power BI in the last 2 years.
But from a manager or someone in the senior leadership team at Tritax, all they see is either a very tight distilled report or an Excel document they can kind of play around with and ask you questions in terms of how and why the data is what it is. Pretty
much. But, I'd say for the first 5 years, we've spent time, producing these like very pretty PDF created Excel created PDF reports that you would print out. And obviously now the deeper you get into Power BI, the more fun that has. So, what we found is that we can, at the push of a button, we've done our calculations, they're all 100% correct. We click a button, it's published to Power BI. We can embed that Power BI in our info box, SharePoint driven internal website. And anyone around the business on their phone, their iPad, anything like that can figure out how many buildings they've got or what's their contracted rent roll of less than 100,000 square foot in the southeast. Simple ways of cutting that data. But one of the interesting things we're starting to do now is we've obviously got these projections of what we think the portfolio is going to achieve. And we have asset managers' names attached to what they said they were going to achieve in that business plan.
In terms of the underwrite.
And you're right. So we can now filter our, contracted rent roll evolution over the next 5 years, filter it for the asset manager, order it chronologically and say, right, so you've got a rent review here coming up. The model thinks it's going to be settled at this based on its own, analytics.
Because it's pulling all information from third parties, or it's self-perpetuating, so it has an understanding of what high, mid, low, what it thinks that rent review would move to.
So it has never been agreeable to me to to assume that inflation is just 2.5%, constantly. So,
Of course,
these scripts that we run, one is downloading on a monthly basis the market's expectations of the forward curves, or we actually download the entire history of every European inflation index as well as all of the projections. So when we do an indexation prediction, we take the amount of time we've got of the historical numbers, and then we bootstrap onto that the projections, and then that feeds into our indexation calculation. So for stepped reviews, fixed reviews, indexations, caps, collars, you can be incredibly accurate on what it is. The more difficult thing, which is where the asset managers come in, is on the open market reviews.
Because they have a bit more of a gut feel in terms of where it should go to, whereas you're looking at it from a pure financial or a spreadsheet perspective, and actually it's a merge of the two.
Exactly, and this is where this was something that I really then wanted to push forward. Was it goes back to the idea about being a projectionist, was I wanted to be able to not only predict the contractual position of the portfolio, I wanted to overlay business plans over this, right? I didn't, what I saw a lot of in the market was people would just say, at the end of every lease, I'm going to get a 6-month void and a 12-month rent free. And, hopefully you get the picture. That's never going to work for me. I wanted to know at the most detailed level from the asset managers, this lettable unit, the tenant's happy there, we're going to roll over the lease, we might give them a small capital contribution, but this other one, excuse me, that building's a problem, it's old, the ESG credentials aren't correct, we're going to have to take a void there, we're going to have these business rates, liability, we're going to have to spend 10 million to refit the building, all of that detail going in, we might put, a megawatt of solar on the roof, so that I could predict and aggregate all of this data up, and then say to this, to the finance directors and the CFOs, you're going to spend in the next 5 years X on delap, or you're going to receive or spend X on delapse, X on ESG, Y on construction, agency and legal, all of that very auditable data going back to business plans that had been provided by asset managers all around the business. Now, this was obviously easier when we were 70 single let properties, but now after the UKCM transaction, we're at like 500 or something lettable units. But because we've bedded down these very strong processes, and as new people come into the business, they know what is expected of them. That we hand over these templates. They're in my belief, very easy to fill in. And we just then aggregate all this data up in a very automated way to produce these very detailed viewpoints of where we think the portfolio is going to perform.
So I'm thinking, if I'm an asset manager, on one hand, this is phenomenal and this is amazing to be able to have access to this, but it's also incredibly scary because you're coming and going, right, this is where I think it is based on my experience.
Yeah.
You're fighting against a computer, right? And
so
I'm not against it, but people are always trying to bake in projections and assumptions, and I guess there's a bit of self-preservation always baked in, or delivery or what have you. Are you just being able to call out stuff faster, or
no? So look, my objective here is only to support the asset managers. I'm not trying to call them out or prove them wrong. And when I wanted to dream up this system, I had to go and pitch the dream to these asset managers that, in spite of me, essentially I'm coming to them and giving them more work because not everybody is producing such detailed business plans at a granular level across, all of their portfolio. And I had to sell to them, look, this will make our business better. It'll give us, a tighter understanding of where there is risk, where there is opportunity. And, what I can create for you is at the click of a button, I can tell you exactly, chronologically, the list of events that you need to be paying attention to, what you said would happen 6 months ago as part of the business plan. And, if what you're saying today is different, so be it, that's business, right? But what we're doing is just keeping track of how information is flowing through the business and the conclusions that we can make from it all. Okay?
So it's that accountability.
It's a bit of accountability, but it's also like, okay, if you thought your tenant was going to agree a 25% increase, but they're now saying 15%, why were you wrong? I don't want to call you out on it, but let's use this information to make the whole system better.
How much does it cost to build a system like this? And the reason why I ask that is we've just concluded a search for someone senior to come into a business who's got some challenges with integrating data, financial team, underwriting, modeling, all of this stuff. So someone's going to go in and basically do what you've done within that particular business. I've also got a founder and COO on the phone of another business we've been working with who's just looking at and exploring ways of building a data lake and importing all this kind of information that we've spoken about. And increasingly so, I've seen in the press, senior leaders go and join private equity businesses, developers, investment management businesses to basically get a grasp on their data financial understanding, so they can be more, they can have more visibility on it, but also when it comes crucially to kind of talking to investors and raising money. And we've kind of touched on a little bit around in terms of building and owning the data internally, but also using external products too. Buy it, build it. How much is like the capital commitment to build some of these things? I'm just trying to think if there's a COO or a founder or someone senior in a leadership position elsewhere at one of these businesses who's looking at and wants to understand, like, what
does this cost?
Does it depend how
long is a piece of string? I mean, I suppose one of the advantages that we've had is that Big Box has been just growing in complexity for the entire time I've been there. So, what I built in year one is very, very different to what we have today. And it's because, we've been able to go on this journey of organically and incrementally improving it every year. So, it's obviously harder if you're going into an already, complicated, bigger business. My advice in this situation is, one, don't cut costs on the data team and analytics team, which a lot of people think they will. They'll spend more money on a finance manager than they would on a data analyst, right? I definitely wouldn't do that. The best advice I can give companies is hire data engineers, data managers, modelers, whatever my field is really called, with like an insatiable desire to go in and like fix problems in that data, improve on the existing processes, understand where there are inefficiencies. I like to describe, an element of what I do is a bit like gardening, right? And I use this only as an example for the listeners, but there's hours and hours and hours of pain and toil. And at the end of it, you've hopefully got this beautiful ecosystem that's functioning perfectly because you've taken the time and you can't rush it. And that's kind of the way you've got to think about this. So, impatience, I'd say, is the biggest cause of these data, these integration failures, because, the senior management say to people, I want this solved in a year, right? And that's just, not really realistic, okay? Because you either work really quickly, right? And therefore it's likely to have a mistake. And bearing in mind, if I'm being playful, I like to describe myself as being in the truth business. And I want to sort of push this idea that truth is better than trust, right? You believe me because I've proven to you that I'm right, rather than you just trusting me that I'm right. So if I rush this build, right, the chances are there'll be a mistake. And one serious mistake in a data platform throws all good faith out the window, and you will never really recover from that. So the best thing to do is just take your time, build it, test it. Once you've got that foundation, then you add another layer, It's like building a building. Each time you've got a really strong floor, you add another floor or another layer of logic, because what you're doing is you're if we use the development as an example, I'm aggregating up development data, right? I'm then asking questions or making conclusions of that data, but I can't answer those questions accurately if that underlying data is not perfect. So
you're constantly stress testing it, reviewing it.
Yeah. So this one, I think, if we're talking about one of the interesting pieces of innovation, that I did, was I found, I'll give you the interesting story, was I spent like 2 or 3 hours debugging a problem, and I could not for the life of me figure out what the problem was. And after those 3 hours, I realized that someone had entered the date 1924, not 2024. Now, because Excel only really displays the last, unless you tell it otherwise, it only displays the last 2 years, the last 2 digits of the year, and it was really hard to see. So what we immediately went and did was we separated our database into 2 halves. One half is our contractual position today, right? One half is our business planning, right? That means that anytime I have a financial model, okay, I can reset that model at the click of a button back to its contractual position, right? And override anything that has been done to that model. Its whole thing gets reset back to its contractual position. And then I can load on top of that layer any one of the multitude of business plans that I've currently got. So what that means is that every time I start a new question, I'll take a model, I'll reset the whole thing. Because what you find is, some number has been hard-coded by some intern, and that mistake is proliferated through months of calculations. And that's just too much operational risk, right? So, while you have to accept that there is operational risk in all things financial, but, with clever use of technologies like Visual Basic, SQL, Python, Excel, all of it, you can manage this operational risk to overcome things like, a number's been hard-coded.
Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People Property Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Where does, human intervention versus data and software, override? Where does that come in?
What do you mean exactly?
I mean, just in terms of your, software being able to rewrite itself or recorrect or re-automate itself versus a human understanding brain leading it, being able to identify and fix a problem.
So I don't think many people are at the stage, Google might be, where software is rewriting itself, and that's where we're getting into the world of AI. Right now, everything is driven by us automating as much of the work as possible, which allows my team to sit there and just think about, how can I improve this situation? How can I improve, the calculation speed? One of the things I'm thinking about now is, Big Box has become so big.
How big?
Well, it's 500 lettable units, after the UKCM transaction. That takes time to calculate. So I'm now going back, being like, I don't want to wait 15 minutes for this calculation. I'm now going back to re-engineer, parts of this Excel file so that I can maybe get that down to 5 minutes. Because if I have that done in 5 minutes, I create more time for myself, and that's one of the other things that, you've constantly got to do. I mean, our Excel file now has gone through, I'd say, hundreds and hundreds of iterations, right? Because, the ideas I had back then didn't benefit from 6 years of experience of working at Tritax. And, back then we had 70 single let buildings, okay? We actually set up one of our private funds, which we call Metrobox, which is a retail warehouse fund. Retail warehouses are what we call one estate, but could have 50 or 60 units, okay? So that automatically took me from a single unit, single let building to a single unit, multi-let building. And the asset managers are constantly dividing a unit into two, taking 2 units and adding it into one. That required a whole new layer of operational complexity that we had to build into the database and build into the model. And what we found happening was, because we had 2 funds at the start, and then we had 6 funds today, and each fund has a slightly different model, because every model you look at when you're talking about property fund management, 80% of it is the same, 20% of it is some slightly different corporate structure that applies only to that fund. But anyway, so what we found happening was changes that were made in one fund weren't necessarily being made in the other fund. And as diligent as you were to remember, right, I've got to go apply that fix into the other funds, you always lost track, especially when you've got a team of, more than one person trying to manage all this. So what we ended up doing was building one master model that only myself and my Suhail colleague, my colleague Suhail, can work with. We built in a sync functionality that'll basically, we'll make changes to one particular place, and it'll then go and sync all those changes to all of the models across the business, which is a phenomenal way for us to just have less to manage, right? And it just meant that every time we then went to that particular fund model, I would be like, has it been synced? No, let's just do it again just to be sure. And each time, what I'm trying to build up for you is this picture that at every single point that we have considered that some risk or failure or mistake could be entered into the system, we've tried to build some form of automation or code or logic that'll, stop that from happening.
You touched on a little while ago AI and the role of AI. AI has obviously been around for a number of years, but in terms of its wider adoption, use is only growing and increasing further. Mm-hmm. How do you see that impacting the world of real estate, investment management, fund management, and analytics?
So I'm going to talk about AI for a little bit first, and then I'll get on to where I see it intersecting with property. But everyone is talking about AI. I talk about it now only as an enthusiast. But, what a lot of people don't know is that even among the researchers, the experts all around the world, very few people actually agree on what this is going to mean for humanity. Okay, we have so many unanswered questions when it comes to legal frameworks, ethics, job disruption, the potential for universal basic income, taxation. All these problems need to be answered. Now, right now, I think it's quite generous to be calling it artificial intelligence. I think it's called that because it's marketable, right? Really, what we're talking about now is it's a complicated or sophisticated neural network. You don't need to know what that means, with a objective function. Now, what that means is that you basically told it needs to solve this for the better. Okay. And back in the 80s or the 90s, we told these computers be good at chess, right? But that was a very singular task that it was capable of. What these AIs are doing now is they have a much broader range of abilities. And every single year we broaden it even further. Now, at some point, the breadth of these abilities might start to match what a human is capable of. And I suppose what a lot of people are really asking right now is does that equal consciousness? Well, how do you even know that? Anyway, so what I want people to think about here is I'm going to give you a little thought experiment. Okay, hopefully we can all agree that in the future we're going to have AI controlled houses. We're going to have AI controlled cars, and inside all of these things there's going to be huge amounts of batteries, right? Because energy storage is this big thing. We've got to turn the grid to be green. Green energy is it fluctuates. We've got to store this energy. Okay. Now, there is a theme coming out of this called autonomous economic agents. And what that basically means is that you could have an AI act in an economic way for you. So if your house and your car has all of this energy storage, okay, you can theoretically charge these batteries up at night, right, at a cost. And then tomorrow at midday or peak time, you'd sell the energy back to the grid, and you'd effectively arbitrage cycle the energy grid. Okay. Yep. So what that means is we now have an AI, and that AI's job is to make money.
To gamify it. Create alpha.
It's creating money. Okay. So we have an entity that is creating money. That's a business. Okay. That's a business. So we have an AI running a business basically here. Now that leads on to the next conclusion, right? What happens about liability here? If the AI goes and loses a load of money, is the owner of that AI, is myself, as the owner of that building, liable? Well, not under current legal structures, because under an LLP, if I'm not a director of that business, I don't have liability to that company. So the first question that leads to is, can an AI run a company? And if it can't run a company, then how can I allow it to be trading energy for myself? So anyway, let's just assume that an AI can run a company. Well, what other companies can it run, and how much can it seep into the economy? Now, very simply, if you take a simple bank, an AI could run a bank. You have a load of private individuals who deposit capital into an account, and you say to that AI, judge the risk of each investment that comes your way or the loan, and go and lend that money out. That can be done by an AI. So then take that further. So you now have an AI that's doing all these things. Can it hire an employee to help it if it wanted to? An AI might want a human representative. can it own property? Business today can own property, and the AI is the director of that business. So can that AI-driven business own property? Then, what happens if that AI corrupts itself? Does that AI, or something, it's damaged by another AI, does that AI now need a will to handle the transfer of assets? So, what I'm trying to paint a picture here is one very simple decision about what an AI is snowballs under the current legal structures that exist today. And when this truly does become, generalized artificial intelligence, which is what the term is, and our legal system moves far too slowly to deal with that problem, that AI will be working away faster than our legal system can keep up. So we need to be solving these problems today and having a proper intellectual debate about it.
Getting the framework sorted now for 10, 15, 20 years later.
Now, going back to your point about AI writing software,
being integrated within fund management, investment management, and making more sophisticated real estate decisions.
What the experts are really scared of is what's called the singularity. And this is, it's in the future. It's not today's problem, but I find it, intellectually interesting, is at the point that an AI is capable of rewriting its own code. That means that it can better itself, and it can do that in seconds. So our billions and billions of years of humans' evolution, it can do in a seconds, which means imagine if this AI is incrementally improving itself by 1% every day. Within a year or 2 years, that intelligence will have superseded anything that we can comprehend. We'll have lost control of it, and hopefully you can sort of extrapolate there where I'm getting to. So that is what I want people to think about when they think about AI. But maybe we should come back down to earth.
We should.
And think about...
And make sure the listeners are still listening and staying with it.
And think about, where's AI going to affect real estate? Now, there's 3 areas I'm going to talk about, and they interest me, but I'd also like to describe that I think they're fraught with risk still. Now, the one that I've been hearing for a long time is document management and transaction settlement and things like that. Now, just speaking from experience, we've just onboarded UKCM. There was, 200 plus lettable units in it. There's been terabytes and terabytes of documentation dumped on our desk from the lawyers. I think the number was something like 7,000 different documents. Now, we've obviously been going through hours and hours and hours of work, reading these documents, seeing what its context is, filing it in the right place in the way that we want to order our documents. And, we've been told that, there's an AI that can do that, right? The AI can read the document and understand it's a lease and go and transfer that to a lease section of your hard drive. But all of these things say, I'm 98% accurate, or they boast I'm 99% accurate, I'm the best in the market. But I've just been preaching to you, for almost an hour now about how if it's slightly wrong, it's useless. It's useless, right? So of my 7,000 documents, if 1% of them are wrong, which of those 70 documents are the ones that are incorrect and in the wrong place? So it's either 100% right or it's 100% wrong. So I'm slightly skeptical on that use case, but it's definitely going to be one of the ones that people will encounter the soonest. One of the other things, I'm really interested in Tritax are thinking about is, AI controlled smart buildings, which I, spoke about earlier. It should be, it's this brilliantly intuitive thing for everybody to say yes to. It's great for the landlords. They should be spending less on gas, less electricity. People are talking about all these components in the building having sensors, and those sensors can be used by the AI to predict where the next failure might be, or where the structure is aging, in a way that it shouldn't, and you can preempt any sort of failures in the building that might stop your operations. And you can feed all this information back to the architect, and it'll lead to this like faster evolution of better and better buildings. So there's a lot of advantages to this idea of a smart building. But the problem is, it could be a competitive disadvantage for the tenant to be handing over its usage statistics of that particular building. Now, I know hedge funds would love this data. If they knew that all of tenant A's buildings were operating at 50% capacity, well, they're obviously not doing very well. I'm gonna short that stock. Now, take that even further. What if the AI in the building has been hacked or commandeered by a more powerful, more intelligent AI, and it decides to put all the sprinklers on, right? Who's got the liability there? Is it me because I installed the AI? Is it Microsoft or Google because they run this AI? Or is it the landlord who traditionally has to buy the insurance for that building? If that's the terms of the lease, they might decide, well, I don't want this AI because it's just risk that I don't want. So there's some work there on how to incentivize tenants and landlords to work together, because as we move toward a world where all buildings are like 100% A grade ESG, I think we need some legal structures there to make that work, or get the wheels turning. I think I can't speak about AI's dimensions, or capture all of the problems there, but the one that I really personally like the sound of is, if you're a business like Tritax, you've got a decade of IC committee meetings on all the properties you've bought and the reasons why and the time you did it, all the properties you sold and the reasons why, all the properties that you decided not to buy. So what if I could point an AI at all of that data, right, and ask it to learn from it and build up, like a digital picture of what the investment thesis of my firm is, right?
And see if it matches the reality of what you pitch or what you say?
Well, it takes that, let's call it that investment thesis, and goes and scours the market for all of the available, investments at that time. What that would allow me to do, it's the deal origination and the lead qualification that this could really transform, is that I would no longer miss an opportunity that was perfect for me because I'm stuck in the weeds of something that we're not sure is quite right. Now, if you then take that to the next step, if you added in like topological data of satellite imagery of the way the UK is developing, you could see, there's lots of development there, there's people there, land prices are going to go up there. And you can really start to become quite sophisticated on how you find your next plot of land.
I guess that's on market and off market as well, right? And then I guess the computer will basically be able to feed or be able to tell you the price you should be able to pay for it and what your returns would be over the business plan and further.
I mean, I don't need an AI, to do that. I mean, one of the areas, I mentioned that I'd just done this data science course. Data science is of huge interest to me, which is why when I hired somebody with, no financial training, no property knowledge, hadn't really used Excel, but he was an exceptional at SQL database, and he was a very experienced data scientist. We are talking a lot more about data science at Tritax. We are having, right now we're having a little sort of working group of myself, the data scientist Suhail, and our head of research, and we've just been playing around trying to basically predict prime rents. And it's funny that each of us are coming at this from very, very different angles. And ultimately, prime rents are extremely difficult to predict because the data is not static; it changes. And what we found was we couldn't get very good supply side data on what buildings are available, what aren't, what's being let up. But where I'm quite excited is we're doing a lot of work on predicting equivalent yields into the future, based on what we think the interest rates are going to do, or what the WALT of that building is, or various other things. And we can point this machine learning, because you don't need an AI. AI is kind of just a more advanced machine learning. We can point all of this to all of the valuations that we've got in Tritax for the last 10 years and say, become good at predicting equivalent yields 5 years from now. So that's how you can predict a building's value. Obviously, an AI will just do it a bit faster.
Real estate is an imperfect market generally, and people gain edges based on knowledge, insight, network, underwriting to an extent. What you're talking about kind of takes the edge out of all of that. Or does it give the people who have it a superior edge over the others that don't? And what happens when everyone has this?
I disagree with the idea that we're putting all people out of work.
I'm not saying that. I'm just saying in terms of the imperfect balance of data across the market and decision making.
Certainly, today knowledge is power, and those with the biggest data sets are going to understand what's happening faster. So if you are a huge multinational property owner like
Blackstone,
BlackRock, Blackstone, they probably have such a big property portfolio, they have a better understanding than our own governments do of exactly what the property market is doing. And that is incredibly powerful if you can build up that data set. So I don't believe that I feel like this is augmenting people's skills, that the people with 30, 40 years of property knowledge we're just making them be able to see more, do more, and make more decisions faster, make more intelligent decisions and faster.
And is that why the big shops are getting bigger?
I think, and my concern is, I feel like this is what has happened with commercial banks, that there's a winner takes all, and the accounting and audit firms concentrated into 4 winners. Commercial banks, you've got Goldman Sachs, JP Morgan, Citi. There's X of them. It's very difficult to break into that echelon of the biggest too big to fail institutions. I could definitely see that happening with property.
So bringing this back down to, I touched on obviously a lot of big shops getting bigger. There's also a start of a new cycle. Is used a lot in terms of the press and the opportunity. There are a lot of senior kind of figureheads or prominent people who've left and spun out and set up their own business. How can those businesses that are at a very embryonic size scale capture some of what you're talking about to gain a competitive edge?
Get good with free software.
Or hire data scientists outside of the industry, or
if you're a startup business, you're not going to have the ability to get that manpower. So you're going to have to probably be quite multi-talented individual, and you're going to have to be good at utilizing software. Like, for example, next year, it's reported that Windows is going to embed Copilot into Windows 12. Microsoft is going to embed Copilot into Windows 12. That's going to have an AI baked into it. Get good with that AI because it'll make you far smarter. And I think we're at a point now where those who engage AI the fastest will get a competitive advantage.
Even if you're a very small new startup platform.
Well, arguably, very big companies, they've got processes they have to approve. What data can be put into the AI, what can't. They have to sort of answer all these questions and set guidelines of how, of accepted usage. Like, what are the rules of engagement of artificial intelligence? If I'm a one-man band, I don't have any intellectual property to protect. I can go hell for leather to just get the answers I want to get ahead of the game.
Can you just talk to me about how the partners and investors have responded to the work that you've been doing when it comes to raising capital, reporting, and making better underwriting and asset management decisions?
That's a tough one. I suppose what I can say is, in my world, no news is good news. And generally, for the last 6 years, when we've gone to market, and we've been speaking to credit rating agencies, raising debt, raising equity, showing banks, exactly what we're doing, we've always been complimented on the speed and clarity with which we've been able to present the information. And I know, when we've worked with Lazards quite a lot in the past, and when we were approaching them with a big opportunity last time, they came back and said, "Is Chase doing the modeling?" So I'll take it from that there hasn't been a complaint yet.
How do you go about attracting and retaining talent, and where do you think the talent for your team and for other businesses looking to replicate what you have done, where does that talent come from, and what should they be looking for as well?
It's difficult to know where they come from. You've just got to get out there and meet people. There's no easy way around that. I think it's easier for me to answer the question of how do you attract and retain the people that do my job. And as I mentioned earlier, there can be a lot of repetition in it because you're collecting data, you're processing it, you're making sure it's correct. Therefore, it can be boring. And people like me, they don't want boring work. They want a new problem. So these like STEM graduates, these engineers, they want constant variety. Okay, and one of the ways that I read about that Google used to sort of combat this problem is what they call the 80-20 rule. And that is, of the 5 days that you are working, 4 of them are your core job. And that last day should be spent with you occupied entirely by some form of project that is a personal passion. Because one, that allows you to be in complete control of that project that you want it to be, but also it means that you're not just doing this grind every week. The other mistake that I think a lot of employers are starting to make is there's this theme that you're starting to read that they want everyone back in the office 5 days a week,
especially in the big private equity houses and banks, right? I
think it's a terrible idea. The pandemic showed the world there was another way to work, right? And that was you had to trust your employees, and I'm not saying that 5 days at home is the right way to do it, but there is a happy medium, and it's maybe 3 days a week, or at least that's what Tritax is really pushing, is 3 days a week. You're in the office, 2 days you're at home. Now, what I really want to say here is that human performance is not defined by a straight line between 8 and 6 p.m. 5 days a week. Human performance is a sine wave. Periods of like high intensity output followed by periods of recovery. Now, the example I like to use is, Roger Federer, when he wins his semi-final at Wimbledon, he doesn't immediately get back on the court to go practice for his final. He rests, he recovers, he eats well, he does whatever he needs to do to mentally get back into a place that he can commit with 100% intensity. And that's the way you need to treat your employees, okay? With my team, on a Monday, we sit down and we agree a set of very aggressive targets for the week ahead. And even if we achieved 75, 80% of those, I'd be thrilled because, we're making good progress. I then leave my team to do it at their own time. We'll have constant checkups. We'll make sure the progress is being made and that, they're not struggling. But I'd let them be adults. I treat them as adults. And it's amazing how much they respond to that, because he says to me, I've done my task. Do you want me to do something else? And I'm like, look, if you blitzed your task a day early, clock off early. And they deserve that because he worked for an extended period of high intensity.
I like the fact you said earlier, you go back and you work really, really hard to give yourself the time back. 10 minutes, 15 minutes. You crunch on something to give yourself 10 minutes back. Yeah. I can just imagine you guys sitting around with a cup of tea in the Tritax office, just kind of thinking, I've got my time back now. Like, what is this next problem or project that I can kind of solve or work on?
I wish. Often what happens is, and people have joked about it in the office, is that I have one computer here, I have a laptop here, and an iPad here, and I just move from one device to the next. But anyway.
Talk to me about models being wrong, because they're never 100% right, even if you can over-engineer and catch it and check it, and you've got all these kind of systems working completely. Like, I know we may have touched on it earlier, but real estate is imperfect, but a few guests that have been on this show that have been wildly successful talk about the spreadsheet not 100% being right, and actually some gut and intuition and experience is really important to blend and work with that.
Absolutely. And this is I use my work to support the partners, because they're the ones who have 40 years of experience in the property market. The most experienced guys have heard or seen analysis, not necessarily by me, but like, I just know there's a number wrong here.
Yeah,
and
do they just know?
Right, because there is that gut instinct, and that is irreplaceable. Okay, and that's also why AI is not going to replace like senior stakeholders. But when dealing with modeling and financial analysis, it's absolute paramount to ensure that the people who are using that are actually trained to do that. And what I really don't agree with is there seems to be this sentiment around lots of businesses that because it's in Excel, that means that everybody should be able to use this model. I often get complaints that, someone in the business can't understand the model. And I'm like, well, no, of course not. It's not built for you. It's built to be complex and to answer the question. It's a scalpel for a very particular tool. If somebody says to me, everybody should use a financial model, that's like saying everybody should fly a commercial jet or be a surgeon and perform an operation. The world doesn't work that way. But you've just reminded me of a quote that I read years and years and years ago. And it was basically, someone told me, all models are wrong, but some can be useful. And that's the theme you've got to accept, is that your model is 95, 98, 97% wrong, right? It's that 3% is wrong. You just got to make sure that it's not critical. And you can do that by building, tests into the model. Everybody knows you should build tests. Any well-trained modeler will know to build tests into the model. It can be as simple as, does the balance sheet balance? Okay. We've taken that another step further, where there's hundreds and hundreds of tests. We have added in some of the most mundane tests into our models that you would think would never be necessary. Okay. But what happens is that as that model goes through hundreds and hundreds of iterations, you'll find that ridiculously simple test has caught something because somebody has structurally changed the model, and the logic that you originally built it with is no longer there. So really always test and push things forward on how to catch a mistake. You won't get them all, but you can make sure they won't be big, critical errors.
For someone who is an analyst at a private equity firm, fund developer, who has listened to what you said about being in that seat for 3 years and then transitioning and moving on to someone else, but who actually wants to become a career modeler or really own their craft. What advice would you give them in terms of kind of skill stacking and kind of going on that journey to...
It's absolutely about learning as many languages and technologies as possible. So the way to think about it is, I started with Excel and then I wanted to do something else, something slightly more powerful. So I started learning Python. Then I realized that I needed to understand databases, so I learned MySQL. Then I wanted to learn about data science, so I learned R and I learned some of these other tools. Keep learning all of these things. All of this knowledge is online. It doesn't cost much. It's like 50, 60 pounds a course, takes 3, 4, 5 months, all self-paced, and you just keep doing them. And what you end up building internally is this picture of the breadth of things that technology is capable of. And this is what has made me, relatively successful so far, is not just being a modeler. It's that whenever there is a problem, I'm architecting a solution in my head based on all of these technologies that I've seen in front of me. And that is what makes you, a career modeler. And I'm not even sure I actually like the term modeler, because it's quite limited on the scope of things that you're capable of doing. It's everything from, business operations to intelligence to financial analysis to database and, analytics. It's this whole field or subset of what I think is in the finance team.
And do you look to other sectors that are further advanced, or tech platforms or businesses that, real estate is quite antiquated still? There's definitely a journey and improvement, but do you look to other sectors and think, how can I apply those learnings within the confines of the built environment?
I think you have to, but there are industries that just by the definition of what they are more suitable to be revamped. And as you say, property at its heart is still buildings and people. And I don't think that core aspect of the industry is going to change. What I want property to become is just more intelligent. I want data to be more transparent and more available in the way that, Bloomberg made all stock prices available to everybody from a terminal. That doesn't really exist in property. Property's problem is that all information is quite opaque and it's siloed.
That's what I mean about it being imperfect.
And it's imperfect. And the people that are winning love that, right?
Of course.
But I want the data, and I want universal access to that data, right? Because that makes it an efficient market.
But do we want an efficient market? Anyway, look, question for you as we bring this conversation to a close is, if I gave you, Mr. Chase French, £500 million worth of capital, who are the people, what property, and which place would you look to deploy that capital? And you can't ask your computer to tell you.
Okay. Well, look, obviously, I work at Tritax, so I'm biased, but I generally think, and my personal opinion, I have to say that for compliance reasons, is that logistics is the most exciting property sector. And I think the problem here is that a lot of people think, when they think of logistics, they think of a shed, an old shed at the edge of a town that stores things. But to me, logistics is this huge universe of data centers, cold storage, robotics, AI, compute centers, life sciences. All of these sectors are coming into logistics space. I mean, we have a tenant now that uses the logistics space for film production, right? Because it's a big building, it's perfect for sets. So, when you take that multiple use case, I think, you want an investment that's got, lots of different possibilities. Beyond that, why I love it is it's got long-term structural tailwinds from the growth of e-commerce, from, this increasing need for businesses to have supply chain resilience, which was really shown up in the pandemic. There's a real big theme around onshoring of the industries that we've lost to, like the Far East, etc. And also, there's deglobalization, because of the need to, decarbonize the planet. We can't import goods in the way we did, and all of those things require more building space, cleverer buildings, etc., etc. Beyond that, for the 5-6 years I've been at Tritax, I think we've averaged 5% vacancy in the market, and that low vacancy, it will support very nice rental growth, hopefully, but also we live in a country that's got a very high population density, and all of the good, obvious land has kind of been taken up, right? So you're not easily going to start increasing the supply of these logistics buildings, especially in areas which solve the people, property, and place problem, because you need the building in a place where there's educated talent, and you need it with infrastructure and power and all these other things. So I just see there's like a lot of positives to logistics as an industry. Beyond that, and I mentioned data centers, but I love technology, and data centers are the future. And it is always great to invest in an industry that is growing exponentially. Now, don't quote me on the statistic, but it's something like in the last 2 years alone, we've produced more data than the entire history of human civilization. And there's always some really grand statistic like that. But if you think about it, like 20 years ago, there was the internet. 10 years ago, there were smartphones. We're now moving on to AI, and AI is going to consume data like you've never understood before. And a traditional data center has always been about data storage with some servers, for computing. An AI center is now completely compute and very little data storage. So what a data center means is growing in scope as well, while the consumption of data is growing, exponentially. Now, to me, that just sounds like a wonderful investment. Now, unfortunately, data centers are not the easiest thing to invest in, but if I had £500 million, that might make that a bit easier.
Yeah, tiny little data center. Yeah. You'd have to gear it up.
Yeah, it won't be a big one. But I suppose the final thing, and I'm going to bring up one that's not property related, but one that is of very great interest to me, is the growing theme of real world asset tokenization. Now, crypto has grown to an industry of 2.5 trillion in the last, it's been around 10 years. Now, believe me when I say 95% of all of it is rubbish. It's vaporware. It's never going to commit to anything. But what crypto has demonstrated is that assets can be traded extremely efficiently on a distributed ledger. Okay? Now, real world asset tokenization means I will take an asset such as a stock or a bond. I will wrap it in a digital wrapper, and I will trade that on a blockchain. Now, what that means is that I've got permissionless liquidity. I've got open access. I've got far reduced trading friction, and I've got much better transparency for risk management. Now, in layman's terms, what that means is any time of day, anywhere in the world, if I have an internet connection, I can log on and trade something and have it instantly settled with no counterparty. Okay, I don't have to trade through an asset manager or a bank or anything like that. Now imagine if you compare, I've got the numbers here. So if you compare the 2.5 trillion value of crypto, the global stock market is 90 trillion, real estate 280 trillion, and the global derivatives market is over 1 quadrillion. Now, I can't even picture how big a number that is, but it is currently unclear, which protocols are going to win this race. But because the world exists in standards, there's going to be one or two protocols that is the universal access, or let's call it framework, that we are trading all of this value, right? So can you imagine the value of a network that's trading quadrillions of derivatives and, the trillions of real estate? That would be a really exciting thing to do.
So how does real estate become tokenized then?
So I don't know if you've heard, but for quite a few people over the last 20 years have been trying to come up with, let's call it a real estate exchange, where they take a building, they break it into shares, and they create an exchange.
So IPSX,
right.
And there have been others as well.
And I don't know, perhaps I'm wrong. I don't think they've ever been particularly successful, because the problem that exists is they can't create liquidity, right? And also, who's creating these shares? How do the legal structures work? It's essentially the same kind of concept with tokens, except I take a building, I take, the legal documents that show we're the owner of that building. We'll fractionalize the ownership of that building into tokens, and then I can immediately put those tokens onto something as simple as Ethereum. And Ethereum then creates global liquidity for anyone on the planet to buy and sell things using the existing infrastructure that already exists. So when I say tokenization of assets, it's literally simple as representing any asset in the world in the form of a digital token or an NFT. Because if you own that NFT in your wallet, you are the legal owner of that building. And it doesn't just have to be, Canary Wharf. It can be a house. So whenever you buy a house, you're literally buying the NFT, and that can happen in weeks rather than the 3 months it takes solicitors to do all of that.
So bringing this back to people, property and place, who are the people that you bring on the journey when it comes to your spending spree?
What's to spend the 500 million?
Yeah.
Oh, there's definitely a few people, friends at Tritax will bring along.
So,
but I'm not sure I'll ever be lucky enough to have 500 million in my life.
Well, I don't know about that. I think you're certainly on the path to do that. Maybe I should rename this podcast the People, Property, Place Power Podcast, especially with kind of the need for data centers and the insatiable appetite that we're all going to need when it comes to that. Well, look, Chase, you've had a phenomenal career. I think the kind of the transition into real estate is certainly benefited Tritax hugely, and I think that I've certainly learned a huge amount. If I'm being honest, quite a lot of it's gone right over the top of my head, but I'm hoping that the people listening to this would have learned a few things as well, and given them some further thought to go and apply to their business and how they can kind of improve or take some of their learning. So thank you, and I'm excited to see what you and the team go on to do.
Thank you for having me. It's been great fun.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information. Or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.